Okay, so let's go live with take two of this video. Having got right to the end of the previous video, I realised that my overlays over here in the corner where it says the accountant has finished year end actually overlapped my spreadsheet, which wasn't very good, was it? So let's try this again. Right, okay, so your accountant has finished your year end or your client's year end, but not posted the end of year journals. So the trial balance, the balance sheet, is all different in the published accounts compared to the Xero accounts. I did a discovery call, had a discovery call last week with a potential new client, and one of the things that we discovered within a few minutes of looking at his accounts is that his end of year accounts hadn't matched his published accounts since March 2017. So he had had 2018 and 2019 accounts done by his accountant. They've been published on Companies House, and he had no idea that at 2018 the accounts were about £50,000 different, and 2019 they're about £90,000 different in terms of the shareholder funds between what was showing on Xero and what was showing in the statutory accounts. And for me, that's one of my major bugbears, is when I see a new client or I start looking at their accounts, that's one of the first things that I check. So you can't expect your client to manage their business effectively if the statutory accounts and the published accounts are not reconciled. So let's have a quick look. First of all, how do we check that one set of accounts matches the other? So I'm going to go into Companies House Beta. You'll see that I've got all of these tiles set up. I use a little tool called Speed Dial 2, which is a Chrome extension. Let me show you how to find that. So Speed Dial 2 Pro is a Chrome extension that I use to put all of my favourite websites on a new tab page. That syncs across all my devices, so it allows me to very quickly access the software and the tools that I need to manage my clients' accounts. So let's pop into Xero, let's pop into Companies House, and I'm going to look for Xero UK accounts. They of course won't match the Xero demo, but this, for the purpose of doing this demonstration, you'll see what I'm looking at. So I'm looking for the last filed accounts on the filing history tab, and we've got a set of full accounts here, and I'm looking for the balance sheet. So I'm going to scroll down the accounts, strategic report, report for directors, auditors report, statement of comprehensive income, and there we go, the balance sheet. So what I'm looking at is for these figures for March 2019 to 2018 to match my Xero account. Now if I pop back over into Xero and I go to my balance sheet, I would run a balance sheet for the current year end and look at the last 2 or 3 periods. Now this is Xero's demo account, so of course there's nothing in 2019 and 18. But this would be my checking point to make sure that the 2019 total equity in my client's accounts matches the equity shown in the statutory accounts. And if it doesn't, what do we need to do about that? So let me close some of these windows. Now, the first thing I would do if I found out that these the Xero accounts don't match the statutory accounts is I would ask the accountant to post the journal. Most of the time, that's all that needs to happen to take that action. So it's not your job as the bookkeeper, not normally your job as the bookkeeper, to post the end of year journals that an accountant has already done. Now, some accountants are quite happy to pass the end of year journals on to the bookkeeper or the client and get them to post it. Most accountants prefer to post it themselves so that they know it matches the end of year accounts, and then they'll lock the Xero account so that it can't be adjusted. Some accountants just don't bother, and from their perspective, what they care about is that the data in their system is correct for doing end of year accounts. They don't necessarily care whether the information is correct in the client's accounts, otherwise they'd post the journal, wouldn't they? So it's a real bugbear of mine when that doesn't happen, because if the end of year adjustments haven't been posted, how does your client know what their director's loan account is? How do they know what reversing charges were accrued or prepaid in the previous year, and how, you know, whether they've been impacting the current year properly, whether they've been posted to the current year accounts? How do they know that their accounts are right if they don't match what's been published with Companies House? So it could be that there are accruals and prepayment journals that have been posted, corporation tax and dividend adjustments might be posted, bad debt provisions might be posted. All of these things are super important. If they're important enough for the stat accounts, they're important enough for the Xero accounts, and they do make a difference to the decisions that your clients might be making if they're not there. So it's super important that that is accurate. So first of all, it's not your job to do it, so ask the accountant to post the journal. If the accountant doesn't do it because you've asked, then ask the business owner to ask the accountant to post the journal. And you can usually just send a snapshot of the statutory accounts, shareholders' funds versus the Xero shareholders' funds, show there's a difference, tell them that you've noticed that this is an issue in Xero, and then ask them to ask their accountant to post the journal. And again, that's 9 times out of 10, that will just get that job done for you. If the accountant hasn't posted it, but they're happy for you to post it, ask the accountant for a copy of the extended end of year trial balance so that you can post the journals. Now, an extended trial balance will show, it's usually done in Excel or Google Sheet or whatever. But what you'll see is the end of year trial balance from Xero, and then a column for each of the adjustments. So they might have posted a bad debt provision, they might have posted a corporation tax provision, they might have posted a dividend adjustment, and then you'll get the end of year trial balance, and you'll be able to see each of the adjustments between Xero and the published accounts. So then you can use that to create the journals to post into Xero to get your Xero account to match the published accounts. Not all accountants will do an end of year TB in Excel. Sometimes they'll do it in their end of year accounting software, their accounts production software. So you could ask the accountant for a copy of the end of year trial balance so that you can compare the trial balance in Xero to the trial balance in their accounts, so that you can then post the adjusting journal. If they're not that helpful, you might have to work it out for yourself. Now, if you have to work it out for yourself, a set of full accounts is quite handy. It provides the information for accruals, prepayments, trade debtors. You won't be able to see what they are, but you can at least see the number, so you're one step closer forward. So it could be, in a really unfortunate situation, that you're forced to use the published accounts or the full accounts that your client will have to post that end of year journal. So let's quickly go and have a look at how we would do that. So if we go back into Xero, I'm going to run a trial balance, and I'm going to run that at year end. So let's take that at March 31st. So pretend that's 2019. And we're going to export that into Excel. Now, this is where I need to be careful that my Excel spreadsheet doesn't overlap. Okay, so this is the one I created earlier. So the where I started this from is, move that over. All right, so what you can't see is I've got 2 windows on my PC. So I'm looking to check that the window that shows what you can see means that the spreadsheet that I can see is not overlapping. Right, so these first 2 columns are the debits and credits for March 2020. So I'm going to remove those, and then I'm going to copy this over and create 2 more columns. So this will be my actual per Xero, if I could spell it, actual. This is going to be my adjustment, which I'm going to just zero out. and this is my end of year trial balance. So this is my closing trial balance. I'm also going to change this so Xero will export and pick up individual cells. What I really want to do is a sum calculation, which is hidden on my, see if I can get this to come up. Okay, auto sum. Okay. So remembering that the sum of my debits must equal the sum of my credits because this is a trial balance. Now I'm just going to minimize this one and move it out of the way. So here's one I created earlier. And what we're looking at is, say I'd pulled all these figures for the closing trial balance off my end of year set of accounts. What I would then do is I would have created the adjustment. So you can see I've added £1,000 here because there was an additional cell. I've provided for a bad debt here and some depreciation here, and I've got £1,750 worth of adjustments that I need to post because my end of year closing trial balance for my published accounts does not match what's in Xero. So it's different with all of these transactions. Now, this is the root or the information you need for your journal, but not all of these might be a journal adjustment. So here, for example, where your sales difference, where there's a difference in the sales, if it's an accrued income journal, that's fine. We can just put a credit into sales and a debit into accrued income in the balance sheet. But what if this is a missing invoice? What if the trial balance was provided to the accountant and then an invoice was removed or voided? So perhaps there's a difference in the data that was given to the accountant versus what's on the system now. And this is a really common issue. So say an end of year invoice had been raised, the client had queried it, and then your client had then deleted it. The trial balance according to the accountant is £1,000 higher, but the actual system in Xero is showing more. So in that instance, what I would do is, rather than put a journal adjustment in, I would recreate the invoice as a dummy invoice so that your invoice sales, your VAT and your age receivables is all correct. And then I would credit note it on the 1st of April in the following year to remove it to match what had happened in the statutory accounts. A depreciation journal. Again, in Xero, I wouldn't post depreciation by journal. What I would do is set up the fixed asset and then have the fixed asset depreciating in Xero, and then have that provide the data for the accountant. Now, when the accountants are doing end of year depreciation of fixed asset journals, they quite often take just a year cost of that depreciation, whereas in Xero you might have brought the asset in part year. So you might have an adjusting journal to post to match what the accountant put through Xero that year end, but to reverse it out of the following period because it's not the right cost. So they might have provided for 12 months worth of depreciation when really there should only have been 6. We've got the depreciation. Let's just change that because that is not computer asset, that is computer asset depreciation. So you can see that I copied that code and then didn't adjust it. And I've got my, in this case, my extra £1,000 worth of income that I'm providing for here is actually a journal accrual. So I wouldn't rush to make these journal adjustments. What I would do is first of all identify what the differences are, and then I would look at each difference to work out what the appropriate adjustment is. Is it a dummy invoice? Is it a fixed asset? Is it quite simply a journal? If it's an accrual or a prepayment, the challenge you have there is you don't necessarily know, if you pulled this information from a set of full accounts, what is being prepaid and where it needs to be reversed to. So it might be that you bought a 12-month subscription in your last month and 11 months of that has been deferred. You don't really want that coming back into month 1 of your current year. So again, you might have to have a conversation with the accountant to say, we've identified accruals and prepayments of XYZ. Could you please explain what they are and the periods that they relate to? And hopefully they'll provide you with the right information so that you can reverse them into the right periods. So I hope you found that useful. Please drop a note in the comments below. Please click on the like button if you liked the video and if it did help you. And let me know if there's anything else that you need help with, and we'll record more videos for you. I'll speak to you soon then. Thanks a lot. Bye bye.